Hello and welcome to the day ahead. It is Thursday, August the 11th. I'm Andrew Gagan. Well, let's get across the market action overnight. Wall Street rallying on news US inflation has slowed more than expected. The S&P 500 and Nasdaq soaring as high growth and tech stocks rallied on expectations that the Fed will move less aggressively at its next meeting. Apple, Alphabet, Amazon and Microsoft all rose more than 2% as Treasury yields fell. Tesla rose close to 4% on news Elon Musk sold $6.9 billion worth of shares in the EV maker to finance a potential deal for Twitter amid an ongoing legal battle with the social media platform. And Meta jumped 5.8% after the Facebook parent said on Tuesday it raised $10 billion in its first ever bond offering. Meta, the only big tech company without debt, will use the offering to fund future initiatives, including its metaverse virtual reality. Turning to earnings, Disney posting better than expected earnings, bolstered by increased spending at its domestic theme parks. Disney Plus subscriptions also rose to 152 million during the third quarter, unveiling a new pricing structure that would include a version of Disney Plus that has advertisements in a bid to make its streaming service more profitable. Meanwhile, Wendy's shares fell after the company reported earnings before the opening bell, topping earnings estimates but missing revenue expectations. The fast food chain reporting second quarter earnings of 24 cents a share. That's 2 cents above consensus. However, revenue for the quarter came in at 537 million, below the estimate there. Well, inflation in the US was unchanged in July, prompting markets to price in a lower interest rate hike from the Fed next month. The flat consumer price index reading was the largest month-on-month deceleration of price increases since 1973 and was largely due to a 20% drop in the cost of fuel. Annual inflation sits at 8.5%, while underlying inflation pressures remain elevated, with core CPI, which removes food and fuel, up 0.3% in July. It's running at an annual pace of 5.9%. Chicago Fed President Charles Evans said this is the first positive reading on price pressures since the Fed began tightening policy, saying, "I feel like we're in a good place and we can pivot to be more restrictive if inflation gets out of hand more than what I'm thinking about." And Minneapolis Fed President Neil Kashkari saying he still believes that the bank will need to raise its policy rate to 3.9% by the end of the year and 4.4% by the end of 2023 to fight inflation, saying the idea of rate cutting early next year is not realistic. Well, US Treasury yields eased in response to the inflation data. Fed funds futures traders are now pricing in a 43% chance that the central bank will hike rates by 75 basis points at its September meeting. The 10-year note is at 2.79%, while the 2-year falling to 3.23%. And major currencies firmed against the US dollar. The Aussie, initially pushing back above 70 cents, now trading at 69.5. Well, the rally on Wall Street is set to boost the local share market. ASX futures currently up 1%. And global oil prices have risen as implied demand in the US rose after weeks of lackluster activity over the peak summer driving season in North America. Brent crude up around 1%. Iron ore futures fell marginally, while base metal prices are mostly higher as US dollar weakness supports commodity prices. Nickel jumping more than 4%, while gold futures have edged higher. And the crypto market has mirrored the rally in equities. Bitcoin up more than 3%, while Ethereum surging 8%. Looking at the day ahead, a string of full-year results out today, including AMP and Mirvac. Telstra has just dropped its results, reporting full-year profit dipping 4.6% to $1.8 billion, while QBE has reported first-half profit of $151 million. That is your day ahead. We'll see you again tomorrow.